Good morning, traders. It's 15th October 2015, and welcome to Justfintech ProAMT Traders Digest. Let me go through the disclaimer first. Trading futures involves substantial risk of loss and not suitable for all investors. This video is for educational purpose only and not a recommendation to trade. Please consult your personal financial advisor or do your own research before taking any trades based on the levels discussed here. We are not responsible for any losses arising due to trades taken on the basis of these levels. The information in this video is in accordance with the terms and conditions, risk disclosure disclaimer of justfintech.com. So SGX Nifty is trading at 8147.50, 27 points up from previous close, and that again falls into a very interesting area. We had been rejecting that area on Nifty futures yesterday and saw a very choppy trade initially. Yesterday, the S&P 500 futures, I was expecting a drop in that, and it tried to push above 2000, could not sustain, and then fell back to a naked point of control, which was 1982.50. Uh, what I was expecting is that Nifty futures also pushes down in the initial trade on SGX, but the US market is up, S&P is recovering, and SGX has also recovered a bit. So we'll just have a look at what happened yesterday. So as expected, we got a open. I had expected that we open around 8115 and push down here, and then later push up around these levels and come back to touch 8115. So instead of pushing down here, what we got is open is equal to low at 8010, and we slowly pushed up towards this high of 8148, which happened to be the VH of the previous day. Got rejected there, and in a very choppy move. This was I'll pull up the Renko chart and show. It was a very choppy move down. It rotated in a symmetric manner though, but kept on rotating lower and higher within this range, and finally came down to break that open low. Saw instant pullback. This pullback, I had expected that we again chop around here and then pull back and go to break the high. But the break of high did not happen. The ideal scenario would have been to check what lies below this low, because as I had been talking since 2 days, that 8090 is an important level, and if we had pushed below that and found buying, then at least we would have made up our mind. Uh, if not we, at least I would have made up my mind to carry forward the longs. But I'm still not convinced of carrying forward the longs, because we are still below that 8180 levels which I had been mentioning. So once we get acceptance above that, I will try to go part long. I'm don't want to commit fully, because only above 8255 I'll be able to take my long positions in full strength. Let me pull up the Renko chart. So this is we went up, and then in this slow and very choppy move came down. So on the day time frame, we have established a very Gaussian balance, and this looks like a textbook bell curve on volume as well as TPO charts. Both we have established a balance, and any not I will not be convinced with the break of just this balance, because this is like a balance forming within this bigger balance, and then we again have this whole balance. So even a break above or below this balance won't convince me of a trending trade. Let us see what Bank Nifty did. So Bank Nifty also did the same thing. We had a open low, same open low, and it pushed till it was not able to even push above the previous day's VH, got rejected there, and slowly in a very choppy move came down. Though it was not able to break that open low, it did not break that open low. Again, moved up towards the previous day VWAP, and then kept on chopping back and forth till the previous day VL, which happened to be the developing VL as well. So in Bank Nifty also we have a same kind of balance, and not expecting it to break down on either side and give a trending move until we go below this. So this because this is the dividing line which separates this balance from this, the previous one. So until we go and check what lies within this and then start trading below this, it's unlikely to get a trending move. I just wanted to show, because since 2 days I had been forgetting to show this. This dark band within this chart is actually the weekly developing value area, TPO based weekly developing value area, and the POC was up here. The developing weekly POC was up here and shifted down day before, and then it's continuously shifting down. Now it is at 8127, is centered with the developing POC of yesterday, and the developing value area high, the weekly developing value area high, is at 8181. So now almost the weekly profile matches to that area of interest at 8180, and any acceptance above that can lead to 8200, 8220 obviously. But as I had been saying, that even a pullback till there doesn't convince of a intermediate trend change towards the upside, because the swing high as of now, what we have put in, is at a very important level, and till we auction above that, I'm still not convinced of any positional longs. Now we have also the Nifty range of yesterday was the least in previous few months. So when market starts to become so much range bound, it's likely to give a trending move, and maybe waiting for some important political event or some news to come out so that the participants react to that. Though on the institutional front, the FIIs have been offloading what they had bought in 7750, 7850 range. They have been offloading into these highs, and most often what they do is have a sideways move, and then change positions from longs to short, because it takes time to dump such long positions. Uh, they had gone long to a great extent, and to distribute all that takes time. And if we had seen the 8550, 8650 range, it was the same kind of move. We chopped in that 100-point range for 3 days, and they distributed everything, and finally we got that worst ever fall where we had two gap downs back to back. And so the rally, which started from 7930, lasted till 7650, and then the drop of that 600 points was like within few days. So always it's like the fear takes over greed, and fear is always like more fierce, because the bears always take the elevator. I'll go through this long-term chart. I've not pulled up yesterday's data though. This is a daily chart, and just wanted to show you how we are doing on the range side. So this is a day range, the day range bar. So takes the range of that day, and these lines are the one standard deviation and second standard deviation, which is 70 and 95%. So since like 30th September, we are within that. So the range is like a one standard deviation range, and out of that, this was one of the smallest one. And on the volume, yesterday's oh sorry, this is not yesterday's chart. So I have data till 13th. So on 13th, the volume was just equivalent to the 5-day median volume. And on that RBI day, we had a volume which was greater than 5-day median. And post that, we have been witnessing low volumes apart from this 9th October, when the volume was greater. So most of the times what happens is, when the volume and range both cross the first and second standard deviation, that is where the bigger participants are actually changing positions. So either they go short from their longs or go long from their shorts. So this also plays a important part in analyzing any kind of move, because generally once a move starts, we don't need that kind of volumes for the move to go on that side, because once the accumulation or distribution is done, and then when it after the accumulation stage, when it starts rising, it's not necessary that the whole rally should be with volumes, because we had always been seeing that everyone looks at the conventional volume chart and sees that if the breakout is with volume, then the breakout is sustainable. So the breakout ideally can be with volumes, but doesn't mean that the trend till it lasts should be with volumes every day. Not necessary that every day those volumes will be there, because here, as we can see, post this cross of this high, we never had those volumes, and the volumes finally came when we hit the top, and then later it again dropped. So it's not necessary that there is volume in the whole trend. The Bank Nifty Renko, and Bank Nifty, while going up, also was chopping badly. Though it was a symmetric move, it went on towards the previous day VH and got sold off. But while coming down, the rotations became a bit bigger. So here I was expecting that if Bank Nifty would break through the low, then that would have given more direction to Nifty. Because when you see a bigger rotation down, then there are more chances that when it breaks through a previous reference, it will be able to push through in a better way. Because when the rotations are bigger, that means somebody has some intention of going into that direction and continuing that move. So once a pullback comes, again the move down would start with a swift push down. It won't be a choppy push down. But later what happened is, again it went up, the pullback went sideways, it started chopping, again came down, and then saw a very good pullback. So this pullback uh, made sure that we don't go down at least yesterday. So for today, what I would expect is Bank Nifty might open around this area because Nifty is trading up 30 points. So we open around here. Let me zoom out. So we may open around here, then try to push towards 17,650 and find sellers there. If we don't find sellers there, it may chop around here between 17,650 and 17,620, chop around here, and then if it keeps on getting buyers within this range, then may push above this area to go towards 17,700 and this HVN at 17,735. If that doesn't happen, if this push and the buyers don't come here, then what we can expect is a failure here and then push down back into this 7580, which is also around the close of yesterday, and then come down again, test buying interest around 17,550, and if the sellers come below this, because we are in a very confined range, so till we don't get a fresh push from the sellers below or fresh push by the buyers above this balanced area, it's very unlikely to give a trending move beyond those areas. So what I am looking for is uh, we'll have to keep a close watch where the buyers or sellers are coming within the day, rather than just going by the data of yesterday. We would have to keep a watch at what's happening during the day and then take a call. Though these two scenarios, the two hypos are there, but still I would not prefer to commit much to these hypos because I'm not convinced with these levels yet. We are within the range and don't want to just go by those naked levels. And for Nifty, what I'm expecting is if we open around this previous day high, we try to push till 8175, 8180, and if we get sellers there, then push down towards 8145, 8140 zone, and chop around there, and then again start pushing down towards yesterday's low. On the contrary, if we are able to get acceptance above 8180, if we start going sideways above that, find acceptance there, then may push up till 8220 and find sellers around in that zone. Uh, this is also the VAH of 12th October. So maybe this will be a place to look for sellers, and if at all we are able to push above 8180. Now what I was trying to show on the cumulative delta front, because there were some questions that what happens if we see the cumulative delta on a daily chart. So only thing interesting in seeing the cumulative delta on a daily chart is whether there are aggressive buyers at important levels or not. Because see, market delta, we can do a setting. First is the density, and second is the this is a diagonal. Uh, this colors, the red and green, actually correspond to the diagonal strength. So if this buyer is x times greater than this buyer, so we can define a custom percentage, and this will turn green only if this buyer is greater than X number, then this seller. And the same way, this this will turn red when it's greater than the previous buyer. So it doesn't give a clear picture of the sellers coming in this range and we react to that numbers. It is not that we'll react to those numbers just because there are aggressive sellers there. This footprint has turned red and we should sell. It is again the point of interest. So this seller is at a point of interest. This is the previous day's value, and or this is the developing value of that day, and the seller is above that. So the next day we'll have to see whether the buyer can come above that or not, because it's a known reference point. If the buyer comes above that, he may try to push the auction up, but till he can't push the auction up above that, we are not going to just pay importance to this number. Now, in the same way, we saw sellers coming below that. So we need to give importance to these because the sellers are trying to protect that level and push the auction down. Now, these buyers are below a known reference. So we pushed below the previous day's value and the buyers came below that. So what we look at is this seller, which is again at a known reference, and these buyers, which are again at a known reference. Uh, there is no need to watch the other numbers till they are not at a known reference point. So today again, uh, the expectation of rotating up and then pushing back down into this yesterday's VH again coincides with that seller's interest area. So if we can get more sellers there again today, then we can push down. Else we'll again be chopping in a very narrow range. Also, what I wanted to point out is yesterday I was just going through this whole range that the reason of chopping here is actually many areas of interest lie here. And yesterday I was showing this. So what has happened is all the value areas, the previous, the current balance value area, the daily profiles, everything is coinciding with uh, clear HVN here and the POC of this entire balance. So everything, when everything coincides at a particular level, then we try to spend more time there to establish a fair value before going out of balance. So I think that's all from me for today, and have a profitable trading day.